My name is Mark Sebastian. I'm your only option. I am the founder and CEO of um, Option Pit, and I am been a professional trader for over 20 years, going on 24. I have expertise in VIX volatility, in tracking large institutional order flow. So when Goldman and Citadel buy huge lots of calls and puts, that's one of the things I track. And then, I'm just an expert when it comes to options. I've been doing this for, going on a quarter of a century. So that's me. And today, what I'm going to be walking you through is, how I'm seeing markets. And then we're going to take a deeper look at how to evaluate the cost of options on equities. So Apple, Amazon, United Healthcare, and what I'm doing right here. And I'm going to kind of walk you through that. So it's going to be fun. I'm going to show you my scans that I run too. So we're going to get a little peek behind the curtain, if you will. So that's what we're up to today. And again, you got everything kind of mildly up. Call it a kind of a dead cat bounce. We do have, some news that is hit that is helping, pushing us. The tax bill cleared the House. Like it or hate it, it's a measure of it's another piece of uncertainty that's being taken out, for the good or for the bad. You have home sales that just came out and they dropped to their slowest pace. You've got other economic data that's hit. And then at 1 o'clock Eastern, noon Central, there is going to be an auction of $18 billion in 10-year tips. Now, those should fare better than yesterday's 30-year bond auction. And you're saying, Mark, why are you talking bonds? Well, let me tell you something. All right, let's take a look at SPX. It had it went from this thing might go green today and rally into a total bloodbath on Wednesday. Well, let's take a look at when that bloodbath started. I'm on a 2-day. There we go. Let's hone in right here. When did the bloodbath start? Boom. Here, this is literally Rick Santelli reporting the results of the auction. And then this is what happened. Bonds are the market. All right. Equities like the S&P 500 and the Qs will try to ignore the bond market as long as they can. But at a certain point, bonds have such a cascading effect across the world, right? During COVID, we got this big bump in housing prices. And part of the reason for that big bump was that interest rates were 2.5% for a mortgage, right? My mortgage here is, I think, 2.75%. And now a mortgage is 7%. But houses did not get significantly cheaper. So the new sales and existing home sales are just, if you need to sell your house, now is not the time to do it. Let's just put it that way. There are still people wanting homes, but I think that middle area of houses is where the pain is really being felt. Starter houses are still moving, but not enough of those are being built. And the ultra luxury, those are always fine. But the $500,000 to $1.5 million housing range, that's going to take some heat. So bonds are at the core of every piece of the economy. Borrowing costs for capital equipment, commercial paper, large projects, small projects, home improvement loans, car loans, personal loans, business loans, you name it. The movement in the 10-year and the 30-year basically set those rates. So that's what's bad about rates going up like they are. Now, you're going to respond to me and say, Mark, 7%, I was paying that in the 80s. I was paying, and things were booming in the 80s. That's true. That's true. But the government didn't have $37 trillion in debt at the time. The problem is, as rates go up, government debt, the servicing of government debt becomes larger and larger and larger. So that's where, this is a little different than higher rates back in the 80s. All right. So, having just digested that, what does all this mean? Well, you got to continue to watch TLT. You have to continue to watch TLT. It's trading 83.79, down about 18 cents. The low from October was 82.42. That would be the equivalent of like 5.25 on the 30-year. Which would be bad. Currently, the 30-year is about 5.10. So that is that. What do you do with rates? So the issue we have is that the 30-year could go to 6, it could go to 7. Where's the market if that happens? Right? I mean, it kind of feels like the Fed's losing control here a little bit. All right, and this is my friend Mike Guyad, I'll tell you, there's still Japan looming out there too. So, what do you do in this market? All right, well, we talked about yesterday how you can do a strangle. And I know many of you probably weren't here yesterday, so let's talk about it. All right. If I think the market is going up, what am I going to do? I'm going to buy a call. If I think the market is going to go down, what do? I buy a put. If I think the market is going to move hard, but I'm not sure in what direction, what if I bought a call and a put? That is called a strangle. And let me show you what that would look like. All right, so this is the SPY. Let's say I'm looking at SPY trading 484. And I'm saying, this sucker is going to move. I'm not sure if we're going to completely tank or if we're going to rip back to new all-time highs. What do I do in that scenario? Well, this is where the strangle comes into play. I can buy a May 30th. So these have about 8 days to expire. I could buy a May 30th, a 583 put, and a 586 call. And that's going to cost me about $11.30. And here's how it moves. Let me get that fixed. There we go. Here is how it moves. This purple line kind of represents how it moves today. And the green line represents how it pays out at expiration. And you're saying, Mark, $11.30, that's $1,130. How are you going to make how are you going to make up $11? All right. How much did SPY move on Wednesday? Well, it closed down $9.50, but at its peak, it was down $11. Low to high, it had an 11-point range in a day. In a day. So, how do I trade something like this? How do I trade something like this? Well, let's go back a couple of days here, and let's pretend that I put on a strangle on Tuesday for May 30th. We were trading 592.85. So let's say I bought the 591 put for $5.30. And I bought the 594 call for $5.40. So I'm paying $10.70. All right, well, how are my 592 puts looking? They're worth $11.70. And my 594 calls? So my 592 puts are worth $1 more than I paid for both the put and the call combined. And the 594 call is still worth $2. That is how that makes me money. So that is what a strangle is. Now, I like them on the S&P 500, but I like them more on equities and on ETFs. And that's because it's an excellent way to play tops and bottoms. Anybody here, and tell me if this is you. Has anybody here been really interested in buying a stock and they see the stock is dropping, but they're also afraid it's going to drop a lot more? Or you want to try and buy it on this dip. Does that sound familiar to anybody? And then the next thing you know, the stock rebounds and you miss the rally. Does that sound familiar to anybody? It should. It's happened to me too. We've all had that issue. All right. A stock's getting torched and we're too scared to to pull the trigger. Yeah, it happens all the time. All right, well, I'm going to show you a little bit of secret sauce here, folks. So this is my Amazon is one of the stocks I really like, right? I know I sound like a broken record, but I really like Amazon. So Amazon is hitting my cheap volatility scan, my cheap options scan. All right, so it's hitting my cheap option scan. So what does that mean? All right, the red line that I'm going to put back on here represents how much options cost. So options on Amazon cost 30. 30 options on Amazon cost a 30 volatility. That's what we would say. Units of option cost and option worth are in volatility. So, like you got $5, I've got 5 volatilities. So the option prices on Amazon are a 30 vol. All right. Amazon over the last 10 days has moved $5.36 on average. All right. How much does that represent? All right. This yellow line, that's my line that represents how much options are actually worth. So if I want to figure out, and don't worry, you don't need to know this. So if I want to figure out how much an option is worth, I take that option worth number, $5.25. All right. That's weird. Just one of that guy. All right. So $5.35 divided by 202.5. Amazon's moving 2.6% a day. All right. Now, I just multiply that number times 16. 42. So they're charging you 30 and the options are worth 42. Does that seem like value there, traders? Yes, it does. Now, some context. We have the big gap from the 9th in there. But even if you threw that out, you're getting some decent movement in Amazon. By other metrics. I can pull this in if I want to get that out. If I pulled out that big, huge gap, and Amazon's still moving at 4.86. So if you want to use that one, then Amazon options are 38. So 38 still a lot higher than the 30 they're charging us. So what? Now, the issue is, all right, I just walked you through that. Do you think I have time to go stock by stock by stock and figure out what is a good value? No, I do not. That's why I build scanners. And this is something I'm going to help you guys build in RipZone. So what this scanner does is it scours. So I've got a bull scanner and a bear scanner. It looks for options that the option price is below the option value, the option worth. And today it's giving me Amazon ARM Citigroup, CSX, Carvana, CVS, AT&T, and Verizon. All right, now to make it a bull scan, I've got some order flow metrics built into this. And then, also hitting a bear scan. CSX is on both, which tells me they don't know which direction they're going to go. Delicious. So, let's just kind of hone in on Amazon. Obviously, you have China, you have rates, you have tariffs, you have all kinds of craziness. Now, I still really like Amazon to go higher. But if I'm wrong, you've seen it can get to 160. If rates really roll over, I mean, what if the China deal falls apart? Right? We got issues. So I think Amazon's going to rip, and we're going to get some sort of, official deal. But I want to be protected because if this thing drops, it's going to really drop. All right. Well, with it trading 202, I can buy a 205 call for about $6. And I can buy a 195 put for about $3.90. Show you what that looks like. Let me uncheck my existing positions. I thought I killed that. Oh, well. And, you know what? I killed it elsewhere, not here. All right. So here we are in July. And I was looking at June. I'm sorry. Here we are in June. And all right, let's just build this triangle together. Right? Part one, I think Amazon's going higher. I buy a call. There's your call. Part two, I'm also worried it could go lower. I buy my put. And you can see here's the price action of the put. And when I put it together, here's my trade. You can see I have I lean a little bit bullish on this trade. But if the China deal falls apart and Amazon goes to 160, I'm a happy camper. Right? The upside move, I like Amazon up to 225. If the China deal falls apart, I like Amazon down to 160. That sound about right to you folks? Sounds about right to me. All right, so what I just walked you through is what I'm going to be doing with you every Tuesday in Rip Zone. So for Rip Zone, you're getting the best volatility trade every single week from Andrew. You're getting lessons on how to trade volatility, understand VIX, how VIX and SPX are interrelated, how SPY is interrelated to that whole thing. And then on Tuesdays, I'm going to dig in with you on equity volatility, equity option prices, and equity option values. And I'm going to teach you how to evaluate equity options to figure out whether you want to do a strangle play, just go long, just go short, and we're going to trade it. Both of our goal is for you to trade outside of our own recommendations with the education that you learn. And I know my students, my traders will tell you how much they learn here. So if you'd like to join, click the link that is pinned to the top of the chat. or give us a call, 888-872-3301. We are wrapping up pricing on tomorrow. Founders pricing wraps up tomorrow. After tomorrow, the Strangle product, what I just taught you, is eventually going to be its own product run by me that will still be included with RipZone, but we'll actually sell it one off. And after Friday, that is not going to be included in the RipZone package. So if you don't buy between now and Friday at noon tomorrow, you are going to miss out on a second product that we're including in RipZone. Agent 407, you will concentrate on the strangle strategy for equities most often. How do you determine the likelihood of strangle versus call or put alone? Really depends on what volatility is telling me. So how much is the stock? How much are the options worth? And how much do the options cost? Right? If a car is worth $5,000, I'm not going to pay $7,000 for it. If a car is worth $7,000, I will pay $5,000 for it. This will be on Tuesdays. RipZone is every single day of the week at 11 o'clock. And you've got amazing traders in there to guide you through the lessons and everything and answer your questions. The chat is all day. It's a lot of fun. Folks, I may still pop in on Andrew every now and then just to check up on him. Payment plans are available. There, you also, if you're an existing client, may have credits. Correct, Northport, Florida man. That is correct. You got upgraded for free. Pretty nice. All right. Any other questions for me? Is there a return policy? 2 weeks, no questions asked. Yes. All of our products, 2 weeks, no questions asked. So if you listen to me 10 times, listen to me and Andrew for 10 sessions, and you don't know it's not for you, we need to discuss how you come to your metrics for decision making. And mine. Like, I don't think it's that hard to make a decision. The moment I met Lauren, I decided that I was going to marry her. That's my wife. Been with you since Profit Revolution, so thank you. Thanks, Northport, Florida man. We take care of our own. All right, time is the metric. Yes. All right. Well, folks, obviously there's a lot more. I'm not suggesting going out and doing strangles. They're doing this strangle right now, but I don't hate this idea. It's the Amazon 205 call and the Amazon 195 put. The total should be less than $10 for June. And the goal is to sell whichever side is winning for the total value of the strangle in this case. That's the easiest goal. Now, if you're new to trading, if you've never done a strangle before, the VIX at 21 is not the time to start. All right, everybody. Yeah. Think of weekly profit zone as more of like a pair trade, and RipZone is a straight play on volatility. And in both the index space, VIX, SPX, and in the equity space, the equity strangles I'm going to be doing. All right, everybody. I would like to thank everybody being here one more time. Click 888-872-3301. Give us a call, or click the link in click the link above the chat. or shoot us an email, support@optionpit.com. Payment plans are available, and you might have a credit if you're an existing client. All right, everybody. I am Mark Sebastian. I am your only option. Hans will be with you tomorrow to go through what's happening in the income space right now. All right, everybody. Once again, that number is 888-872-3301. Give us a call if you want to try to see if there's a payment plan that fits you. I'm Mark Sebastian, your only option.